Swift finishes testing and paving the way for CBDC use cross-border. This was from yesterday, March 9th. Today's March 10th. It's 5:53 a.m. And this is a crypto newsletter specifically covering Swift because we're nearing the Big Bang moment and they're releasing a whole lot of fire and we got to cover it. So successful testing paves way for CBDC use cross-border technology and innovation. Central and commercial banks see clear potential and value in Swift's pioneering CBDC interoperability solution following successful testing in a sandbox environment. So this goes back to what the narrative is. It's all about the interoperability and kind of what we've seen as far as the proof of what's about to go down here is that you're going to have all these digital islands basically. And right here, digital islands. And it's all the countries with their own CBDCs, but you're going to need a common neutral digital bridge settlement asset that's going to do the cross-currency conversion between them. And I have something at the end that ChatGPT cooked up as far as common settlement assets and XRP, XLM, etc. But that'll be at the end of the video. So let's keep reading here. So central bank digital currencies are clearly gaining momentum, but as central banks around the world continue to explore the potential use of central bank-backed digital money in their local markets, how can we ensure that the evolving global payments landscape can continue to seamlessly interoperate regardless of the form value takes? Enabling interoperability alongside emerging innovations is a key focus for us at Swift and a key challenge for the financial industry as digital currencies develop. According to the Atlantic Council, more than 110 countries are currently exploring a CBDC. In a recent survey by the OMFIF, Digital Monetary Institute found that almost a quarter are expecting launch within the next 1 or 2 years. So 1 or 2 years, there we go. However, most central banks are focusing primarily on domestic usage, which could lead to a fragmented landscape consisting of digital islands if left unaddressed. So this is all good, right? They're updating their payment systems, making them instant. You're seeing it with FedNow, you're seeing it with UPI, you're seeing it with a bunch of others. But then there's that last mile where you need to have the interlinkages with these domestic payment systems with foreign exchange conversion layer built into it. So our solution has been successfully tested across almost 5,000 transactions between 2 different blockchain networks and a traditional fiat currency. And we're delighted to have the support of our community in developing it further. So connecting digital islands, results of our latest experiment. We're working closely with the financial community to overcome this challenge so that as CBDCs evolve, they could also be used cross-border as well. So there's all with all the kind of stuff we shared on the past week, there's this talk about, interoperability must be kind of at the forefront of making decisions when these countries develop their CBDCs. It's for this cross-border solution. In October last year, we announced that we had successfully developed a solution to enable CBDCs to move between DLT-based and fiat-based systems using existing financial infrastructure. We've now tested that solution in a sandbox environment with 18 central and commercial banks. Participants expressed strong support for the solution's continued development, noting that it enabled seamless exchange of CBDCs, even those built on different platforms. Our experiments have shown the critical role that Swift can play in a financial ecosystem in which digital and traditional currencies coexist. Our solution has been successfully tested across almost 5,000 transactions between 2 different blockchain networks and a traditional fiat currency, and we're delighted to have the support of the community in developing it further. Many participants have made clear the desire for continued collaboration on interoperability, and this is particularly pleasing. So that makes sense because all of them are on board with the interoperability factor because of what the kind of result of it's going to be, because they all have to be able to have that factored in to their domestic systems for this to all kind of be able to reach its true potential. And that's what they want to happen. So global collaboration, responsible innovation, the solution development and testing has truly been a global collaborative effort. Sandbox participants included the Banque de France, the Dutch Bank, the Monetary Authority of Singapore, BNP Paribas, HSBC, Intence, Sao Paulo, NatWest, Royal Bank of Canada. So many different countries, Standard Chartered, UBS. An additional 4 central banks were observers, providing input and feedback without participating in the sandbox. During the 12-week collaborative testing period, participants processed a total of 4,736 transactions between the Quorum and Corda blockchain networks and between Corda and a fiat currency. So it looks like Corda and Quorum were the main preferred choices, but Corda a little bit more because it had the second pairing as well too. So over the coming months, we will develop a beta version of the solution for payments that can be tested further by central banks. Second phase of sandbox testing will also be held, in which the Swift community can collaborate further with a focus on new use cases, including security settlement, such as cross-asset exchange, trade finance, and conditional payments. So the first step is kind of bridging these payments cross-border and kind of leveling up that system. And then the next step would be to level up the security settlement and like the overall markets kind of infrastructure. So instant, frictionless, and interoperable technological evolution in the global payment space can unlock a range of exciting new possibilities in financial services. We'll continue to innovate and experiment with our community to develop real-world solutions that support our strategic focus to enable instant, frictionless, and interoperable cross-border transactions for value in all its forms. Alongside our community of more than 11,500 financial institutions connecting 4 billion accounts in over 200 countries and territories, we're helping to transform the underlying financial infrastructure that the global economy relies on, meeting the fast-changing needs and expectations of both businesses and consumers all around the globe. That's why it's so huge. I mean, look at all that. It really is like all these players are coming together to launch this new system, a new way of doing things. And it's the underlying financial infrastructure of the global economy, which relies on it. And we're going to be able to, and we already have, taken a stab at some of these digital bridge neutral settlement assets that are going to be bridging all these things. So truly unmatched times that we're living in. So what the community is saying, so global head of payments and receivables at BNP Paribas, as new clearing alternatives arise with CBDCs. So new clearing alternatives. It is important that we as a community leverage the safe and transparent utilities and standards built together with Swift. This paper shows the path to an industrial approach to access new and innovative ways to transact between parties. Louis Sun, global head of domestic emerging payments, global payment solution at HSBC, said interoperability is key to releasing the potential of CBDCs to deliver real-time cross-border payments. While interest in CBDCs is growing, so is the risk of fragmentation as a widening range of technologies and standards is being experimented with. Our continuing collaboration with Swift, central banks, and other commercial banks provide an invaluable platform to innovate solutions that can bring about faster, cheaper, and more secure cross-border payments. So then you have, when it comes to CBDCs, interoperability becomes a key enabler to avoiding liquidity traps and creating a network effect. We truly believe that Swift, through its experience and capabilities, is the natural market neutral candidate to support future digital asset developments. It's crazy. It's all the same verbiage we see all the time and all the same buzzwords. Avoiding liquidity traps, natural market neutral. You have new clearing alternatives arising with CBDCs built on standards, right? So like all the same stuff. And we're talking about interoperability, and it's the key to avoiding fragmentation and just everything that these two coins that we've been stacking up have been working on for years now. They all have the right connections to make this happen. I mean, we saw the IMF labeling Stellar and XRP Ripple as, you know, that the common settlement asset just the other day. Now you have all this stuff coming out. It's all at once. So collaborating with central banks, Swifts, and peers have allowed participants to share valuable lessons as well as their own experiment. Okay, let's keep going down. Our participation in the Swift CBDC sandbox allowed us to concretely envision what CBDC, and CBDC fiat currency interconnection solutions could be and the challenges they bring, while taking advantage of both the existing Swift infrastructure, well known for its security and robustness, and the opportunities Swift's enhanced platform can provide. An open, interoperable architecture is essential for secure, frictionless, and evolving cross-border payment flows in the digitization of currencies. Standard Chartered's participation in the sandbox underscores our commitment to innovation and to bringing future-ready capabilities to our clients. So they're laying up the groundwork, right? Step by step, but we know how that end goal is going to be achieved, and these are the necessary parts for that to happen. Then, if we go to this, Federal Reserve Chair says wholesale CBDC digital dollar may not need congressional approval, but retail does because it's on the back end. So, and this guy said, that's because wholesale CBDC is nothing new. What's new is the DLT-based plumbing being explored. Retail CBDC is something new in that it allows the public to effectively open accounts at the central bank, right? So it just all makes sense. We won't even know because it's going to be on the back end. It's replacing the plumbing. Whereas with a retail CBDC, we're directly transacting with it and we have an account with it. It's user facing, whereas this is for the institutions on the back end. So let's pull that up. But also I saw this as well too. The Digital Euro Association last call, the Digital Money Academy will take place on March 15th. It aims at educating the general public and covers the key concepts of retail CBDCs, and that guy's on it. So the Digital Euro Association, Digital Money Academy on central bank digital currencies, and supposedly that guy who had replied to this is a part of the being a guest lecturer for the Digital Euro Association. So, you know, he knows what he's talking about here. And if we go to that article and read it real quick, Powell says wholesale digital dollar may bypass congressional approval. On Wednesday, the U.S. House Committee on Financial Services held a hearing with the Chair of Federal Reserve, Jerome Powell. During this semi-annual monetary policy report, Mr. Powell said that a wholesale CBDC might bypass Congress and be issued without approval. The chair also noted that the CBDC is still years away. Asked whether issuing a CBDC would have to be authorized by Congress, Mr. Powell stated that would absolutely be the case as it relates to a retail CBDC. So where in the past, officials had not noted the Fed had no intention of issuing a CBDC without explicit support from the executive branch in Congress, this is the first time the central bank clarified that this might not be needed for a wholesale option. The reason is that unlike a retail option, a wholesale CBDC would not be directed to consumers. Consumers do not have accounts at the central bank, so the Fed has no direct relations with them for electronic money. Instead, Mr. Powell referred to the wholesale market and a digital dollar that would look an awful lot like a bank reserve. This would simply be a different kind, the Fed chair explained. We're not at the stage of making any real directions. A CBDC will be years in evaluation. And then it goes into Project Hamilton, Project Cedar. Project Cedar also found that distributed ledger technology can enable faster and atomic settlement for foreign exchange transactions and support 24/7 wholesale payments. However, according to Mr. Powell, we have not decided if this is something that the financial system or the country needs. Lastly, the chair commented on the potential impact of issuing a CBDC on the value of stablecoins and other cryptos, hinting that unbacked cryptocurrencies with no intrinsic value may suffer a decline. In contrast, stablecoins that draw on the dollar's credibility would probably hold their value. So there we go. So basically, and like he just said at the end there too, I believe the run that's going to happen is going to be the regulated run. It'll be a hyper boom for the cryptos with utility, and especially the ones that are value transfer tokens, like the XLMs, like the XRPs, the ones that are allowing issued assets on their ledger. And you have those native currencies to the platform acting as a value transfer token. It's huge. It's huge stuff. Holy grail. I'm talking 1,000 year a problem. I can't get over that. It's the holy grail. So let's go to this because I found a couple things in here. I had a little convo with ChatGPT and I asked, what is a digital common settlement asset? So a digital common settlement asset is a type of digital asset that is designed to serve as a common base currency or settlement asset for financial transactions on a blockchain or other distributed ledger technology. In traditional financial systems, settlement assets are typically currencies that are widely accepted and traded, such as the US dollar or the euro. In a blockchain-based system, a digital common settlement asset could serve a similar function by providing a stable unit of account for the value of other digital assets or tokens that are transacted on the blockchain. One example of a digital common settlement asset is XRP, which is the native crypto of the Ripple network. XRP is designed to be used as a bridge currency or settlement asset for cross-border payments and other financial transactions. By using XRP as a settlement asset, Ripple aims to provide faster, more efficient, and more cost-effective cross-border payments compared to traditional financial systems. Other blockchain platforms and projects may also have their own digital common settlement assets, each with their own unique features and use cases. So I was like, well, what are some other ones, right? And there was other examples of common bridge settlement assets. Then you have Bitcoin, you have Ethereum, you have Litecoin, you have Tether, and then out of all the other ones, right? Stellar. It's like they saved what should be number one for last. And Stellar is a blockchain platform that is designed for cross-border payments and other financial transactions. Its native cryptocurrency, Lumens, can serve as a bridge currency or common settlement asset for other digital assets that are transacted on the Stellar network. There are just a few examples of common bridge settlement assets in the DLT and blockchain space. There are many other digital assets and tokens that can serve similar functions depending on the specific use case and requirements of the blockchain platform or project. But XRP and XLM, Stellar and Ripple are the only ones touting this certain use case and built their blockchains and distributed ledgers specifically for that. There really isn't any other comparisons. So Stellar Lumens so I said, can you expand more upon Stellar Lumens and its relation to XRP along with the comparative analysis between XRP and XLM as reserved global digital settlement assets? So it went on. Stellar and XRP are both digital assets that are designed to serve as common settlement assets for cross-border payments and other financial transactions. While they share some similarities, they also have some key differences in terms of their technologies, use cases, and market adoption. One major difference between XLM and XRP is our underlying technology. XRP is the native cryptocurrency of the Ripple network, which uses a consensus algorithm called the XRP ledger to validate transactions and maintain its network. The XRP ledger is a closed network, meaning the only approved validators can participate in the consensus process. In contrast, Stellar is an open source blockchain platform that uses a consensus algorithm called the Stellar Consensus Protocol to validate transactions and maintain its network. So you have XRP serving as a permission network, XLM serving as a permissionless network. So SCP is an open and decentralized consensus protocol that allows anyone to participate in the consensus process, making Stellar more decentralized than Ripple. In terms of use cases, both XLM and XRP are primarily designed for cross-border payments and other financial transactions. However, Ripple has primarily focused on serving large financial institutions such as banks and payment processors, while Stellar has focused on serving individual users and small businesses in emerging markets, wholesale, retail. When it comes to market adoption, XRP has a larger market cap and more widespread adoption among financial institutions, particularly in the banking and payments industry. Many banks and payment processors have partnered with Ripple to use its payment solutions, including its on-demand liquidity service, which uses XRP as a bridge currency for cross-border payments. On the other hand, Stellar has a smaller market cap and less widespread adoption, but it has been gaining traction in emerging markets where traditional financial infrastructure is lacking. Stellar's partnered with a number of companies and organizations to provide low-cost and efficient payment solutions for users in the markets. As for the potential as a reserve global digital settlement asset, both XRP and XLM have been discussed as potential candidates. XRP has the advantage of having more widespread adoption and partnerships with financial institutions, which could make it more likely to be adopted as a reserve currency in the future. However, Stellar's focus on serving individual users and small businesses in emerging markets could give it an advantage in terms of global adoption and accessibility. So overall, while XRP and XLM share some similarities as common settlement assets for cross-border payments, they also have some key differences in terms of their technology, use cases, and market adoption. Which asset will ultimately be adopted as a global reserve currency remains to be seen and will likely depend on a variety of factors, including market demand, adoption, and regulatory considerations. So then I asked it if both of them had a shot at being a global reserve currency. And then it went into it. So basically kind of the same stuff here that it said above. It said overall, while both XRP and XLM have some potential as global reserve currency, it remains to be seen. And then it said in addition to regulatory scrutiny and competition from other digital assets, XRP and XLM face a number of other challenges and uncertainties that can impact their adoption and use as global reserve currencies. It goes into it all, and a good amount of these have been kind of, I mean, there's a rebuttal to them, like volatility. They're super fast with the volatility. It doesn't matter as much. Scalability, I have the scalability to reach that. Interoperability, they have the tools to reach that. Adoption, they're doing that every day. Perception and reputation, I mean, at the moment, it's tainted, but all of a sudden it could flip like that. So yeah, these two are being primed to be the global bridge digital settlement assets, and it's right in our faces. But they're setting up the groundwork. They're doing the first steps. ISO 222 Big Bang. They're setting up their domestic payment systems to be real time and set up with interoperability standards. Then they're going to connect their digital islands, and then they'll have those common digital bridge settlement assets to be there when they're ready to unlock that liquidity and have all the tokenization of all assets. And those two will be serving right in the middle. So crazy stuff going on. We're seeing it all unfold in our eyes. There's so much news every day. It's hard to keep up, but I'm going to try my best. I'm going to try to give it the most valuable out of all the information that drops, even though a ton of it is. It's hard to kind of not just do like 30 at once, but I want to keep this focused on Swift, ISO, and everything like that. So I'll see you guys in the Discord and in the next video.